You talk a lot about trading liquid underlyings, but how do you determine whether or not an underlying is liquid?
I mean, typically the first thing you're going to look at is the bid ask of the options. Look, I'm not trading stock. I mean, if you're looking at stock, you'd look at the bid ask too there to see how wide that is. But on the option side, you're looking at the bid ask of the options that you're looking at trading. Most of the time, you want them to be, I mean, all the time, you want them to be as tight as possible. That would be 1 penny wide, and then you work yourself out from there. Now, if a stock is $700, $800, $900 and it has 20-cent wide markets, I'm going to still say that's liquid. So you've got to kind of extrapolate out a little bit here. So it really comes down to the bid ask between the options.
We trade like a certain 80% of the trades we make are in a pretty small universe of underlyings. And sure, that universe is always, it's all liquid. We don't have to check anything. So really the only time we check to see if something's liquid, if it's something we're not used to trading or that we don't trade that often. And then, like Tony said, first we're going to look at the bid-ask spread on the options. And if we still have some questions, we're probably just going to look at the amount of stock that's trading in that underlying. Like at the end of the day, if a stock doesn't trade pretty close to 5 million shares, you're probably not going to want to touch it. It's probably not that liquid. It's not 1 million shares anymore, anything like that. It's probably closer to 5 million, 3, 4, 5 million minimum. Most of the stuff that we trade, if it's equities, trades 20 million to 100 million, and the indexes, that's never a problem. So first you look at the bid-ask spread, then you look at the underlying stock volume. But again, once you start trading, 90% of what you do, or 85% is you're already going to know it's liquid, so you don't have to check much.
Sure.